Hey everybody, welcome back to another episode of Rent Prep for Landlords. It's just me on the podcast here today with our guest, Michael Blanc. Michael is a full-time entrepreneur and investor and a coach who is passionate about helping others become financially free in 3 to 5 years by investing in apartment building deals and with a special focus on raising money. So I came across Michael's blog and started doing a little bit more research on him. I thought it was really interesting what he provides because he's got a niche really in the raising funds for apartment buildings. And he does this currently through Nighthawk Equity. He and his partner, Mark Kenny, they control over $65 million in performing multifamily assets. And in addition to his own investment activities, Michael also provides training and consulting services via the michaelblanc.com. That's Blanc, B-L-A-N-K, and has helped students acquire over 750 units valued in excess of $27 million and is on track for 1,000 units in the next 12 months through his unique Deal Desk program. He's the host of the popular podcast, Apartment Building Investing with Michael Blanc, and writes regularly for Bigger Pockets and Flip Nerds REI Classroom. So just want to welcome you to the podcast here today, Michael. I'm really excited to have you on here and kind of pick your brain about apartment investing. How you doing?
Looking forward to it, Eric.
1, 2, 3, 4. Yeah.
Welcome to the Rent Prep for Landlords podcast. And now your hosts, Stephen White and Eric Worrell.
Yeah, so we've talked a little bit before, and we got some questions that we're going to work through here. And the format for today's show is we're going to kind of go through and pick Michael's brain, and then towards the end of the show, we've got some questions that came in from the Rent Prep for Landlords Facebook group that Michael's going to answer as well. So starting off from the beginning, Michael, I mean, you do mostly multifamily today, even though you've done a whole bunch of stuff. Like, why did you settle on multifamily housing as opposed to kind of single family and kind of playing the route that a lot of our landlord listeners do?
Well, look, I took the route most real estate investors do, which is through single family house, except that I really wanted to do it right, Eric, right? So, you know, we were flipping houses and we were raising money for it. So we're buying like 2 a month. We flipped like 3 dozen in 2.5 years. And it was great. We actually made pretty good money. But then after a while, I was like, well, wait a minute. If I'm not buying, fixing, or selling a house, then I'm not making money. And then worse, once I sell it, there's no more money coming from it. So it just like I replaced my, it was like a job almost. And really what I was seeking is I wasn't really necessarily seeking real estate. I was seeking passive income so I could not, I could be financially free. And that wasn't it. Like it was real estate, but it wasn't really that which I was seeking. I wanted to be permanently financially free. I had done a bunch of other stuff. I did some wholesaling. I had some rentals. I had some apartment buildings. I did a bunch of other stuff that we don't get into, like restaurants and things of that nature. But on the real estate side, it was, I sat down one night and I kind of on a whiteboard and I said, okay, if I want to generate $10,000 in passive income, and I had mostly flips, and I said, well, why don't I just build up a rental portfolio, right? Makes a lot of sense. Well, if I want to replace $10,000 per month in income, and let's say, and I'm in Northern Virginia, so if I can, and within an hour of me, I figured if I can buy a house that cash flows $200 per month, and that was a big if, because that's really hard to do in most parts of the country, but let's say I could, I would need, 50 houses. And it took me 3 years to flip 3 dozen. I was like, holy cow, it's going to take me at least 5 years to do this stuff. It's going to be a long time. And not only that, but it's going to be, in my opinion, and there's some people who do it and managing a portfolio of 50. And then down the road, if I actually want to sell a portfolio of 50, I was like, man, there's got to be a better way. And then I looked at some of my smaller apartment buildings I had who were just sending me checks every month. And I was like, well, man, why don't I just do more of that? But my problem was, I didn't have any money to invest, and I thought I had experience. Turns out that brokers weren't taking me seriously at all. I would call them up and they would ask me, what's your track record? And I said, well, I flipped 3 dozen houses. And he goes, yeah, but how many multifamily have you done? And I'm like, well, none, but look at all the houses I flipped. And so I was making a variety of mistakes, ranging from not using the right language, not being educated enough, not having a team. In other words, I appeared like a newbie. And now knowing what I know, now I'm convinced that not only is multifamily the best real estate strategy for becoming financially free, like in our lifetime, and when I say lifetime, 1 to 2 years is a kind of the time frame. And you can do it today, even if you have no experience or your own cash. So I'm really excited because I'm a former house flipper, and I've kind of seen a different truth, even though I didn't realize that up front. And so I'm kind of spreading the message a little bit.
Okay, Michael. Well, I mean, you're obviously very passionate about this. My question for you, though, is so you've gone from this single family to now investing in multifamily. It sounds like you've figured out the formula for it, but why don't more people go this route? Why do people kind of get stuck in investing in small family or single family homes?
Because no one talks about it properly, right? So there's investors that go to the RIA meetings every single month, and they go there. Why? They go there because they think that they can quit their jobs one day with real estate. I mean, why would they be there on a Thursday night, right, away from their families? They can think that's where they can get to. And the truth is, and I've interviewed now 4 dozen successful full-time entrepreneurs, and the truth is that I would say whole universe of full-time investors, like 2 or 3% have done it with single-family houses, and even those now are doing multifamily. Okay, what I'm saying is the probability of someone actually quitting their job with single-family houses is really, really remote. So why are they sitting there every single month, right? And it's because that's what everybody does. It's easier to get into. You don't need as much money. I live in a house. I get it, right? So there's a comfort zone there. And it's for a reason I said is people think apartment buildings is an advanced strategy. And so they think, let me do 5 or 10 years, single family townhouses, and then I'll take the money in that and then over time roll it into apartment buildings, right? That's kind of what everybody is thinking. And you don't have to do that at all. It's completely unnecessary. And in fact, if everybody I interview on my podcast and I asked him, they've spent 5 years flipping houses, building a rental portfolio, what would you do differently? He goes, I would just shave 5 years off and go right into apartment buildings. Well, why? Well, because now I learned that I can raise money. I know how to build a team and what language to use now. Mm-hmm. And those are all things that I can teach. You can learn these things very quickly, right? So with some education and some techniques, you can overcome both of these major objections and get started with apartments now.
Yeah. Well, I mean, from looking at it from my perspective, so I have 2 units. The idea of buying like a 16-unit apartment building seems extremely
freaky.
Daunting. Yeah. It'd be like looking at an elephant and be like, go eat this. And I wouldn't know where to start, But it sounds like you've got more of a system kind of figured out from your years of experience of what the steps are involved with buying into multifamily. But how would you say that the average person will get started with multifamily, even if they have no experience or cash of their own?
Well, let's talk about what you just said, because I was exactly the same way. I kind of stumbled into the apartment building in 2011 is where I kind of get into it. And one of my wholesalers that I was buying houses from called me, I get this 12-unit on a contract. And I had, in 2007, I actually got started with apartment buildings, took a boot camp and did about 9 months of real hard marketing and looking. And I actually had a letter of intent and offer on an 82-unit in College Station, Texas. And I'm from Virginia, right? This is where this particular teacher was buying. So that's where I was. And I learned a lot and put the whole thing on hold for the restaurants, which is again a different story. And I was flipping houses, another distraction, right? So by the time I got to this, I had some old knowledge that I had to dust off. So I got into this thing. It was listed on the MLS forever. It was mispriced. It was out of compliance. Couldn't be sold. It was a problematic property. I was like, ooh, that sounds like, because now from a house flipper, you're always looking for houses with a problem.
Sure.
And I remember getting this thing under contract, and I walked up to this building, and it was like this 3-story brick block, right, with another one just like it next to it. And I was like, what did I get myself into, right? I mean, I was like so overwhelmed. And then an interesting thing happened, because I had 21 days to do due diligence on. I was at that thing every single day. I was talking to property managers. I was calling to the city. I was walking to units, and all of a sudden, my comfort zone expanded so quickly that by the time 7 days rolled around, like the second week I'm in there, I'm like, man, this is a lot of work. I wish it was bigger because I was already now raising money, right? I was already calling my investors, who, by the way, not very many I had about $1 million deployed on my house flips, and only 2 of those investors came with me to the multifamily. So just another reason how the house flips did not prepare me for multifamily at all. So I'm hitting the phones freaking out because I needed like $250,000 to close on this thing. Mm-hmm. And so I got 2 investors, and the rest I had to recruit. And so I'm freaking out. By the time the second week rolls around, my comfort zone literally expanded dramatically.
Well, let me ask you though. So while you're trying to get these the rest of your investors in on this, I mean, at that time you were a newbie. Like, how do you present yourself so you can be taken seriously? I mean, that had to be tough because it was like your first big multifamily property. I mean, do you have any tips for somebody who's like trying to get investors on board, but they don't have any experience with this?
Yeah. So 2 things. One is it's the language you use. Now, when this particular one was kind of an unsophisticated seller. It was a wife whose husband passed away, and she was selling the assets, right? But in a typical scenario, a lot of owners tend to be a little more sophisticated, especially if it's listed by a broker. Okay. So when you call them up and you say something like, hey, I'm an investor. I'm looking for deals with a 10% return. What do you have? They'll immediately ask you for proof of funds. Why? Because you just sounded like an idiot. Okay. Yeah. Now, it may sound good to you, but really you're not proactively addressing major concerns a broker has, which is, can this person close, which always goes down to, do they have money and do they have experience? And ultimately, it's this person that he's talking around and wasting my time, right? Because they get a lot of these kinds of calls. So instead, what you do is you use better language. To use better language, you can learn how to do that, right? I teach that in my course. I have scripts, right? There's skills you can acquire, like how you analyze a building so that you use the right language. But there's also very important that you build a team around you, right? So if you don't have any experience, well, then don't talk about yourself. If you don't have any money, don't talk about yourself. Talk about the guys behind you, right? If you don't have any experience, talk about the guys behind you. Talk about the property manager you recruited. Talk about the coach or mentor you have, or the advisory board you've built. Right. So now you talk about yourself. I represent a group of high net worth individuals. I'm working with property management company XYZ, who hopefully the broker actually really knows. And they go, "Oh, Frank, yeah, he's great. Yeah, I've been knowing him for years." Right. So all of a sudden now the broker knows that you've aligned yourself with people who are experienced, and now they don't really talk about you anymore. And so as a result, what happens is you're not asked for proof of funds and you're not asked for your track record. Right. And so that's an example of how a little bit of education goes a long way.
Okay, so you're talking about as far as like analyzing the deal itself, and I know that you have resources on this. I mean, how much more complicated is it to analyze a deal if you're looking at like a big apartment building versus if you're used to buying single family double homes?
So in the beginning, I made it way more complicated than it should have been. It took me 4 hours to answer the question. So I get this marketing package in from a broker, and I would crack it open, and I started building the spreadsheet. And it took me 4 hours to answer the question, what is the most I can pay for this deal and why? Right. And that was way too much time. I mean, good grief. If it took me that long to make an offer on a single family house, I would never get done. But what I was doing is I just didn't have the right techniques and tools that we have now. So now when that marketing package comes in, I can answer that same question in 10 minutes. Okay. That's a much better, right? Now, if the broker now gets back to me and goes, well, what did you have in mind? Or can you put this in writing? Well, now I can go in and spend a little more time. So I have an analysis tool called a syndicated deal analyzer that makes it very easy to make that first offer. But it also makes it very easy to do some very sophisticated financial modeling with modeling value add deals, how you slice the pie with investors, and you can make tweaks along the way, and you see exactly what price you should pay by the time you're done, right? So you can do some very sophisticated things also very easily, but you don't have to do all that stuff in the front. So it's a combination of having the right technique and the right tools that I didn't have, 10 years ago.
Sure. Now, if you're buying these properties with investors, do you have a rule of thumb that you go by typically as far as the split with them, or is it all just change depending on the deal and how much funds you need?
Yeah. So, well, obviously the funds drive it, but really the deal, everything that drives the deal is the return for the investors. And this varies by everybody, right? If you have family and friends investors, they would be ecstatic with a 10% return, average annual return, right? They're like, this is great. I can't get this to stock market and CDs. You give me a 10% return, pay me, whatever, some cash distributions in 5 years when we sell it. If I can make a compounded 10% return each year, you're like my rock star. Right. If you're dealing with more sophisticated investors, they're looking for maybe a 15 plus return or maybe even higher. Right. So it really depends on who your investors are. But the point is, once you know what your investors look for, right, and you get this by asking them, hey, how would you feel about a 10, 11% average annual return? They're like, that's great. That's fantastic. At that point, you can then run the numbers through the analyzer, and that says, okay, what's the most I can pay for this deal? How do I slice the deal with the investors? Is it a 50-50 split? Is it an 80-20 split? Right. And it's all driven by the return. Right. So once you know the return, at that point, you say, okay, I want to give these investors an investment vehicle that meets their criteria, their return criteria.
Okay. Now, if somebody's listening to this and they're like, all right, you know what, I'm interested in going into apartments. What's the one thing that they should do to become successful? I mean, what would you suggest to them?
Yeah, it's educate yourself, clearly. So in general, just educate yourself. And there's the boot camps out there. I have online courses. Online course doesn't have to be mine, anybody's, right? Just make sure they teach you how to raise money and how to analyze deals properly. Those are two critical skills. And I spend the most time in my course and what I do in those two because that's the most critical. From a skill perspective is how to analyze deals, because you need that to make offers, obviously. But the other thing is it increases your confidence. Mm-hmm. And like we just talked about, you can always tell what your confidence level is and how people react to you. So the more deals you can analyze, the higher your skill level, the higher your confidence. And then just then learning the skill to raise money. Because think about it. if you can raise money, the sky's the limit, right? So if you have no money or you have some money, at one point it's going to run out. Now what do? What are you going to wait till you get more money? No, you go raise it, right? So once you have the skill and the art of raising money, it's like this giant light bulb for me went off. I'm like, oh, let me get this straight. So my ability to scale this business, to do deals, is only bounded by my ability to find deals and raise money. Yep. Whether the fact that my credit stinks or I don't have any money is completely immaterial. And that was a mind-blowing moment for me.
Yeah, that's it's really interesting. I mean, I know that you have some history based on your past work with like learning about marketing and sales. Is there like a particular sales book or something that you took that you found really helpful for kind of building your confidence as far as being a salesman?
It's funny you say that. I don't really have a sales training per se. I think a lot of things I maybe I do it intuitively, and I do read a lot in general, but I don't really have any formal sales training. So I don't really think you need formal sales training. Mm-hmm. I think it can't hurt. I can't hurt it because we're always selling something every single day, right? So like I said, I do read pretty broadly, and that includes sales and marketing books, and it always helps. But I don't have any formal training in that.
Okay. All right. Going into questions from our Facebook group here, Michael. We got some really good questions, and I'm going to kind of read down these one at a time because actually Erin Church had some really good questions. She had about 4 or 5, so we can just go one at a time here. And the first question that she had is, are there additional considerations as a multifamily property gets more levels? So like comparing a 2-story multifamily versus a 3+ level, is there anything that she should be aware of?
The actual physical levels?
Yes.
Not really.
Yeah. Nothing that you come across with that?
Not really. I mean, the only thing I would say is I don't like flat roofs, right? Yeah. I like pitched roofs better. That makes a lot of sense. They're a lot more high maintenance. But from a level perspective, I don't know. I never thought of it that way. You know, a lot of apartment buildings are garden style anyway, so they're not going to be more than 2 or 3 levels high anyway. Mm-hmm. We're not really buying stuff in the middle of the city. The cap rates are too low. The values are too high, right? So we're not doing a 20 unit. These are going to be more, they're going to be spread out more over land. So it's not really the level thing never even crosses my mind. So,
okay. She also asked, is there an optional or an optimal number of units at a property from a management, maintenance, cash flow perspective?
Right. The answer to that is the bigger, the better.
Okay.
Right? The bigger, the better. Once you get to about 75 units is where you start having full-time staff. Okay. And then sometime, between 50 and 75 is when you start getting into part-time staff. So you started getting into payroll things. And so from that perspective, a full-time leasing manager and a full-time maintenance manager can manage 100 units, right? Mm-hmm. So 100 units from that perspective is probably optimal. Mm-hmm. Or something that's below 50 that doesn't require any kind of payroll as well. So when you get between 50 and 100 is a little bit of an in-between state, and this is why bigger normally is better. You get certain efficiencies. It's not bigger; it's for your first deal. Yeah. That's really what's important, right? So people go, "Oh, bigger and better." I can't see myself doing a 40-unit deal. Then I'm gonna encourage you and challenge you to expand your comfort zone, kind of like we talked about. There's certain things we can do to expand our comfort zones, but at the end of the day, if I can't get you past a 40 unit, then go buy a duplex, go buy a quad. I don't care. Buy something, right? Because once you have the bug, once you have that first deal, what happens is that second and third deal follow in rapid, almost automatic succession. I call it the law of the first deal. If you're intentional about doing multifamily, I know, a lot of guys just do single family houses and duplexes, and they consider them the same, but the mindset is different from a multifamily investor. The multifamily investor may do the first or second deal as a duplex or quad, but their goal is different. Okay. Their goal is not to keep doing duplexes and quads. The goal is to get into multifamily. And so what happens is that the progression I see is, let's say you start with a duplex. If you do a duplex as your first deal with the idea of getting into multifamily, then the next deal is inevitably going to be around 10 units. Mm-hmm. And after that, it's going to be inevitably around 30 units. And the fourth one would be right around 50 units. And this is why most guys can quit their jobs with 3 deals because of this progression. Mm-hmm. The first one always takes the longest and is always the smallest. And the second and third happen very, very quickly and are much bigger. So it's this hockey stick progression. Sure. Right. So within 1 or 2 years, they'll have 100 units. And, that's like $8,000 to $10,000 per month in income, depending on how you slice the pie. And that's the power of the multifamily. You only need 3 deals and you're done.
All right, Michael, another question coming in here from Aaron Church. She said, is there a particular number of bedrooms per unit that seems to have the best long-term return? So do you consider this at all, like when you're looking into a property as far as like the structure of the apartments and like how many bedrooms they have?
Yeah, it really depends on location, right? Because in some areas a one bedroom is really, really desirable, and others you can't rent it, right? So this is where your property manager comes in. So if you know the market yourself, that's great. But a lot of guys doing multifamily are doing it out of area, right? So they don't really have the local expertise. You have to rely on your property manager. That's why they're so important. So they should know what the demand is in a certain area. Like for example, in Washington D.C., the one bedrooms, we could lease them within a day. The two bedrooms would sit there for 2 months. So it's just because of the demographic that's there. On the other hand, when you're, let's say in Memphis, where there's maybe a little more families, well, you're not going to rent a one bedroom because there's more families there, right? So it really depends on the demographic, and your property manager can help guide that.
Okay. I feel like this question we already kind of went over a little bit, but it's good to kind of reframe it a little bit. She says, what are the most valuable ideas from a time, money, or stress perspective that you wish you knew before buying your first multifamily complex?
Yeah, I mean, it's just a whole multifamily strategy in general. I mean, for the effort I was expending with the flipping houses, my gosh, if I had instead of flipping houses like mad in 2009, I would have expended the same amount of energy in multifamily. I mean, that would have been like lights out, right?
Sure.
So it's kind of an example of working smarter, not necessarily harder, kind of thing, and really trying to get over my own false beliefs that I had and certain fears. That took me a long time to kind of get over. And I was, like I said, I was a bit distracted with stuff. And It's just because I didn't know any better. I mean, no one sat me down like we're talking here and going, you know what? Why don't you at least consider it? Here's why you should consider it. Like if I had a mentor that says, you know what? Here's my journey. Here's my realization. Why don't you look into it? I would have gone, let me look into it some more. Maybe you're right. Right. So that's probably from a working smarter perspective.
Yeah.
I wish someone sat me down and said, you're working really hard, Mike, but here's something that might be a little smarter.
Okay. Last question here from Erin. She says, how are updates made as tenants move out, as things break, or is it one building like at one time, so all the units are new at one time? I mean, how do you typically structure this about making updates to your properties when you buy them?
It depends a little bit by property, but in general, you do it upon a turn, kind of like you do with any rental, right? I mean, you don't, because if you go in there and then you probably have to get someone out to get access to the unit, to the house, and then you'll lose income, right? So it's really upon turn. The only difference is if you're doing a really heavy, what's called a reposition, where you're trying to actually change the demographic of your tenant base, where you actually want as many people out as possible, right? So there's different ways to do that. But that is definitely an advanced strategy, because when you try to get as many people out as possible, you're also going to lose income. So you always got to balance the higher rent you're shooting for and the actual income that's in place right now. So you want to try the sweet spot. But in general, you do it when it turns. So for example, let's say everything's kind of run down a little bit, and that tenant leaves. At that point, you put your $4,000 or $5,000 into the unit, make it all look nice, and instead of getting $500, you may be getting $650 for the unit. And that's why over the course of 1 or 2 years, the actual overall income of the building goes up.
Okay. We got one last question here from the Facebook group, and this comes from Sean Geary, and he said that he is actually in the process of 2 seller finance deals for 8+ unit buildings, and he's wondering like what terms he should shoot for, and if you have any examples or experience on seller finance deals and what you think about them.
Yeah, seller finance are great, right? Because you don't have to go to a bank. It's like it's fantastic, right? So, man, the terms, the sky is the limit, really, right? So, I mean, the best you can. So it really depends a little bit on the seller. We're getting loans at 4.5-5% right now. But even if you're paying 6 or 7%, just for not having to go to a bank, it's fantastic. Get a long amortization. I think my bit of advice would be to typically the seller wants their money. They want a lumps, they want their money in a certain, time frame, whatever, 5 years or so. Just always make sure you add in an extension. Now, the seller is probably not going to balk at this stuff, right? But imagine 5 years from now, there's another recession. Okay. And now you have to refinance this building or possibly sell it to pay it off. And then you can't do either. And now this note is due, right? So unless the seller cooperates with you to kind of work that note, now you're technically in default, and he can technically take the building back. Well, you don't want to avoid that. And that goes with anything you're buying, whether it's a single family house rental or not. is make sure you have the option of a long-term financing in place, even though you're in your mind, you're not thinking you're going to use it, just in case you have some extensions in there.
All right. That's great advice. You don't want to get caught with your pants down in the middle of a recession or something like that and then not know where to go from there. So all of this is great insight. It's really interesting. A lot of our listeners, I think, are coming from the perspective of buying single family homes, buying duplexes. Maybe there's a few listening that have already gotten into this field of buying apartment buildings and multifamily housing. But it's interesting getting your insights and, you make it kind of sound easy, even though it sounds really daunting on paper when you look at it if you've never done it before. What would you tell people if they're listening to this podcast? What should they do to take the next step? Would it be to visit your website, or where would you recommend them going?
Yeah, I think one of the biggest objections, Eric, is the money raising part, right? Oh my gosh, I can't wrap my head around that. So I suggest to kind of start with that one objection is to go to my website, which is themichaelblank.com. That's BLANK, and just downloading my free ebook. It's called The Secret to Raising Money to Buy Your First Apartment Building Deal. And I think that will hopefully shift people's minds a little bit, and they go, well, if this is possible, then, kind of what else is possible? And then maybe I'll look into it. Maybe I'll consider it a little bit more.
Yeah, absolutely. I love what you're saying about the fact that the first deal is the hardest, even though it's the smallest one. And then you just kind of get your feet wet, and then all of a sudden things kind of seem like they move quicker for you. And then you hit that hockey stick and you're 3-4 deals in, as opposed to doing single family where you might need to get 12, 15 deals in to kind of feel that financial freedom. So it's really interesting. I can't thank you enough for being on the podcast here today, Michael. And yeah, go ahead and check out his website. I've downloaded that ebook myself. It's a good read. It's very thorough. Really walks you through all the steps, even how to talk to people, how to present yourself. It's a really good ebook if you're thinking about getting into apartment investing. So thanks again, Michael. And can't thank you enough for all the free insights here.
Thanks, Eric. I enjoyed it. Thanks so much.
All right, take care.